Imagine being shortchanged by billions after already falling victim to a massive car loan scandal. That's exactly what's happening to millions of drivers, according to claims firms and consumer groups, who argue that the Financial Conduct Authority's (FCA) proposed redress scheme is nothing short of insulting. But here's where it gets controversial. While victims of the car loan scandal could be owed over £4 billion in compensation, the FCA's plan to apply a mere 2.09% interest rate on payouts threatens to rob them of what they're rightfully due. The scandal revolves around unfair loan commission payments made by banks and lenders to car dealers, leaving borrowers overcharged, some for over a decade. The FCA estimates that 14 million historic car loan contracts may be deemed unfair, with lenders like Lloyds, Barclays, and Ford's financial arms facing a combined £11 billion bill. However, critics argue that the proposed interest rate falls woefully short of what's fair. For context, Marcus Johnson, the sole driver whose case was upheld by the Supreme Court in August, is believed to have received around 7% interest on his compensation, a far cry from the FCA's offering. And this is the part most people miss. If the interest rate were closer to 8%, consumers would be entitled to £14.3 billion, according to the FCA's own documents. Instead, the current proposal leaves them with an average payout of just £700, instead of the £1,030 they could receive at the higher rate. Darren Smith of Cormax Legal calls the 2.09% rate frankly insulting, pointing out the hypocrisy. Would banks accept such a low rate if they were the claimants? Absolutely not. Consumer advocates like Martin Lewis of Money Saving Expert and Alex Neal of Consumer Voice echo this sentiment, labeling the proposal unacceptable and unfair. Even Kevin Durkin, the lawyer who represented Johnson, argues that the FCA's scheme should mirror the Supreme Court's ruling. But the Financing and Leasing Association (FLA) counters that the rate aligns with recent cuts by the Financial Ombudsman Service (FOS), which now uses the Bank of England base rate plus 1%. The FCA defends its stance, claiming the rate is fair and proportionate, and invites feedback. But the question remains: is this enough to make things right for millions of drivers? Or is this yet another example of institutions prioritizing profits over people? Let's spark a debate. Do you think the FCA's proposal is fair, or should victims demand more? Share your thoughts in the comments below.